All right, y'all, weekend's over. Back to work we go in a big week ahead of us. I'd say the charts, though, are painting a very interesting story tonight. We have multiple ranges, stacked ranges on the tick charts right now. And really, that tells me that reversals back and forth are probably where the money is made tomorrow. We'll talk about why I say that tonight, of course. Most importantly, though, by the time we're done tonight, I'm going to give you guys a roadmap, a game plan to make some money on some range reversals tomorrow morning as well. So charts are ready. Enough of the intro. As always, thanks for tuning in and watching here tonight. Let's roll right in, though, and make some money on Tuesday morning. S&P SPY, ready to go tonight. Nasdaq, triple Qs, we're all ready. I have 4 very important clues on the charts in front of us that are telling me where I think the winning trades are waiting for tomorrow. One of those 4 clues is right here on these hourly time frames. I like to use the hourly chart as an overall directional filter. It's pretty easy to see right now. The S&P SPY, bulls are in control. Nasdaq, triple Qs, the bulls, of course, also in control. So 1 out of 4 important clues here. Bulls have control of the momentum, which is very important for me as a directional filter. Clue number 2, there's no major news for tomorrow. Let's now drill down for our next clue on our tick charts right now. Over on the tick charts, it's important to remember we trade tick charts because tick charts, they make entry patterns a whole lot easier. All the time frames, by the way, upper left-hand corner, that is a 7,000 tick chart. And in case you're tuning in for the first time right now, that is the 21 EMA. It's the only indicator you need to make lots of money in any market you want to apply it to. There are 3 more clues on these tick charts right now. One clue is a bullish move up into a trading range. Now, why is it important? Well, because ranges, they love to rotate. They go down, up, down, and usually they rotate with symmetry. The amount below, the amount above. We call these pendulum swings in our video classes and our trade room. As you can see, they failed that rotation. That is not a very bullish clue right now. It's a bearish clue. Second clue in the tick charts here, bearish range. Bear move down into a trading range. Ranges love to rotate. Where do you think this one wants to rotate? If you understand rotation, it's going to want to rotate back lower. That is definitely not a bullish clue, a highly bearish clue here. And the final clue, the 4th clue overall, is that strong move down. Remember, anytime we separate off the moving average, that creates strength. Whenever we have strength, strong moves love to retest before we go out and resume the overall trend. So put all these clues together. We're definitely bullish right now on the hourly time from after that 90-day pause we saw middle of the week last week. But failed rotation higher, bearish range lower, strong move down. Yeah, it's very easy to see right now. I would love to buy some bear traps down here. Now, when I say bear traps, there are 3 different variations, different entry tactics I use to trap bears in. We'll cover that here in a moment. Also, too, if I'm wrong about this, it would not surprise me at all if this becomes one big trading range. Oftentimes, stacked ranges like this, oftentimes we create this big range back and forth. Now, love the idea of some bull traps off the high, but careful though. Being a seller with a bull trap is a bit different entry technique because we're overall bullish on the hourly. So we'll talk about that a bit later on in the video. That's a bit more advanced. We'll cover that here in a few moments. But first things first though, one of my favorite trades for tomorrow is a bear trap down here. Now, one of the easiest ways to make money, if you know you're bullish overall, there's a range above you like this, just wait for it to break out. I'd love to get down around that pendulum swing area. I'm not gonna pick a bottom though down here. What I'll do is like over here, right? What happened? We pulled back, the bears tried once, they tried twice, the 3rd time there, and run back higher. I want that pattern down here, a simple bear trap pattern. So we pull back to that 21. I want to see bears once, go higher, bears twice, always a higher high for a bear trap. Now, why 2 tries? Because now I know where the sellers have their stop losses. If you're caught short, the only way out of that short loss is to buy your way out, a short squeeze, right? So it's a bear trap. Now remember, where does the market want to go? It wants to rotate now back up in the opposite direction. This is where we want to start adding to our winners. So for example, as we rotate higher now, I want to see this pattern. I mentioned earlier, whenever we see separation off the moving average, it's very, very big clue. If I start seeing separation off that moving average, it'll be a shallow pullback. It'll barely miss that 21 EMA, a higher high in price. This is your add-on. Remember, if you want to make more money, add to your winners. And range rotation is one of the most consistent ways we do that in our trade room. So one of 3 different bear traps down here is a bear trap below the moving average and an add-on. Again, leave that runner. You know where the market wants to go. Now, let's face it, we may not get that bear trap down here. There might be so many buyers down here, it just might whoop and run right back up into that range again. Another variation of a bear trap is basically a V-bottom. So we don't get the pullback in 2 tries. We simply just jump off that low and start making that run back up again. Shouldn't surprise anybody after that big move higher we saw to finish off the week last week. These can be challenging though, because that voice in your head is going to be telling you, get in, you're missing it. But I'll tell you right now, you don't want to chase this one. What I do is draw a trend line off the highs. I bring that trend line down around that low. That creates a channel. Then I look at all of these prior swing lows and I try to find one where I can buy underneath that prior swing low. That is usually where the best money is made in these situations. I also look for areas where I can get bears trapped in. Bears try once, bears try twice. Use that same 2-try bear trap I mentioned down here, but apply it from the low of that channel. Squeeze those stops and run higher. A second type of bear trap I look for below the lows is it's a V-bottom. It's a V-bottom into what we call a hidden bull channel. Find the new channel, and whatever you do, don't miss the entry off the low. First test is always the best test off the low of that channel. A third bear trap I like down here is a retest trade. In fact, these are some of our favorites in our trade room. For example, we oftentimes will see a strong run down. We'll get a bear trap down here. We'll squeeze some stops, get a nice easy winner out of that. I always go 1-to-1. So stop is equal to first target, right? 1-to-1, it's based on volatility. I teach this stuff in our free video classes, right? So 1-to-1, stop moves up to point of entry. It's a winning trade. But, sometimes we see such a strong run down. Remember, anytime we see a strong move, bears are going to want to take out that low. These are some of our favorites because now, remember, we're not a bear market. We're an overall bull market. Anybody who sells here, where are they taking their profit targets? They're taking their profit targets down here. Sellers up here become buyers down here. This is a horrible spot to be selling. So if I start seeing, as we go back to that low, if I start seeing these bears come in and try once, try twice, yeah, beautiful. Love, we call these retest trades in our trade room. Would love to squeeze those suckers, right? Squeeze those bears. And again, when you find yourself in a range and you're way up on that trade, don't kick back and relax. Add to your winners. Look for that add-on, right? Remember, it's always that bear trap and the add-on. Use that pendulum swing and let that sucker run. There's 3 bear traps. Now, I want to talk about now if I'm wrong, right? Maybe this will go higher, and I'll tell you, we could buy it up here. We can sell it up there. Before we talk about that though, let's slow down for a second because I know we've covered a lot so far. If you're watching for the first time right now, this might be a brand new language for you. Don't you worry though. I teach this entire system, the entire roadmap in our free trading classes. In fact, I have a ton of examples, bear traps, add-ons, range rotations, how to find the right ranges, time the entries. Guys, I want to help you time better entries, start making more money on your own out there. What I'll do is I'll put a link up top here for you. Upper right-hand corner, hit that link that popped up there. Take that free trading course because the strategy I teach, In that short video course, we'll teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are to be found that day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries right now, if you've lost your confidence in your previous strategy, hit that link that popped up there. Take that free trading course. Everyone loves all the trade examples I share in that short video series. The best part is it is completely 100% free for you. Also be aware too, guys, I'm going to put all the important links you'll need to learn the entire strategy we're talking about tonight. I'll put everything down below the video in the description. Start first on the free video classes. Most folks start making money all on their own, all from that free video class. So start there first. The link is below. And don't forget too, I post a ton of stuff on Twitter X throughout the day each day, charts and videos and mindset stuff right on Twitter X. Give me a follow. Again, all the details are there for you there. Also to our link to our trade room. We trade together every morning at 8 o'clock Eastern time. So grab the links in the description, get signed up, start first on the free video course, especially if you're brand new here, because again, most folks start making money on their own, all from that free video series. Okay, where do we leave off right now? I covered some bear traps down here, and remember, right? It's gonna be the pendulum. This area is great too. Really, anywhere down, this whole area down here, anywhere down here is a great spot for it because you get that prior range, right? That prior range right there. Remember, ranges. What do ranges do? They love to break out pullback. Here's another big clue here for us, right? So they love to break out pullback, breakout and pullback. This thing is just begging to get bought down here. So I love the idea of some bear traps down here. But what if I'm wrong? What if I'm wrong? What if we open up here and we run higher here? Let's talk about some game plans now going higher here over on the Nasdaq. Nasdaq, again, we got that big pop up, that 90-day pause last week. That gives the buyers all the control right now. So I know a lot of fear in the market, a lot of big move down earlier in the year this year, but as of right now, the buyers, they have firm control over all this momentum. Now, before I dive into the tick charts though and talk about entry tactics on the Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in and watching my videos. So thank you so much for all the likes, the shares, the subscribes, the referrals, all the ongoing support. Now, I promise I'm done begging for likes here on YouTube. They make me beg for this stuff. I apologize. Let's now dive in and go to those tick charts. Again, we don't want to trade time charts, right? Time charts are so much more difficult. Tick charts, they make everything so much easier. See for yourself, right? Open a tick chart up. Compared to a 5-minute or 3-minute, you'll see right away the patterns are so much easier to find there. Same basic clues here on the Nasdaq right now. Bull run up into a trading range, range rotation, fails, bear move down into a range. Again, not a bullish clue right there, a very bearish clue right there. And again, most important thing, well, not the most important thing, but almost a dagger right now, is that separation. Whenever markets separate off the moving average like this, it just makes so much strength. The bears are begging to now take out that low. At the same time too, I mentioned this earlier on the S&P right now, right? There's that beautiful range. Well, beautiful may not be the word to use to describe that. I think they're beautiful. I love your range. But again, that range right there, it's just begging for a breakout pullback off that range. So the same stuff we talked about earlier on the S&P going lower can definitely be applied here right now in the Nasdaq going higher here, right? So we're going lower as well, right? We run down, trap the bears in, V bottom, retest trade. Okay, all that stuff is the same thing we talked about earlier there on the S&P. Now, if we go higher here, because again, a lot of times what happens is when they have multiple ranges like this, we call these stacked ranges because they're stacked on top of each other. When ranges are tight like this, oftentimes it becomes one bigger range. And this is basically just one big range like this, right? That's very feasible because we have earnings later this week. We got Jay Powell speaking on Wednesday. So it wouldn't totally surprise me. Again, no major news tomorrow, but it wouldn't totally surprise me if we just kind of just get all kind of consolidated right now into one bigger trading range. So as we go higher here, I do like the idea of the short back down again. But we have to be careful up there, right? Because again, we are an overall bullish market. That is where the hourly time frame comes in handy because it gives a filter overall here. Okay, now if we start rotating higher right now, here right now, how would I buy on the way back to these highs? The market, if we start rotating higher right now, the buyers are hunting for that high right there, right? It's bottom line because if it's one big range, the money is made around the edges. Buyers will buy low, the bears will sell high, right? They'll basically keep on rotating back and forth, right? We get some bear traps down here and some bull traps right here. So I mention this because if we start rotating higher here, before we take out that high overhead, if we start seeing some separation off that moving average. Now, this would not be my favorite trade in the world, but this would be how you do it during that rotation going higher. Separation, again, remember, separation is always the key, right? During range rotation, the key is separation. This is why you only want one moving average. Because if you got too many moving averages, you wind up having too many things to keep track of. One moving average, the 21 EMA, I believe is all you need for these because, again, it keeps you focused on one thing, master it. You put a dozen things on here, there's so many things to keep track of, you're not gonna see that little tiny detail, right? As traders, the little details make big money or they cost big money, right? So it's important we do a lot less, use fewer tools. Okay, I'm on my soapbox now. So that shallow pullback, key, higher high, key, right? Now that tells us, now again, this one, not my favorite trade in the world. So for me, it'd be a half size trade, right? A quarter size trade. If you're new to this stuff right now, maybe a demo trade or a simulated trade, right? Or somebody else's account trade. I'm kidding with you, right? But not my favorite trade there in the middle because again, you're kind of in the messy middle, right? You're in the messy middle, right? The best ones, below lows. Up top of the highs, right? The messy middle, right? So keep it small, or at least I do, in the middle of the trading range. Now, once I get up here, and this is not just the Nasdaq, it's also the S&P as well. Let's not forget, looky, I see you over there. That is that 90-day tariff pause. It's the same culprit on the S&P as well. Aha, I see you. You thought you could disappear from last week, but we see where you're at right now. So that high up there, now think about this. If there's a big range right here, ranges act like magnets, and we go up overhead into that prior high, is that a good place to be a buyer? I know we're bullish overall. Is that a good spot to be buying? No, right? This is the last place. You cannot pick a worse place to want to buy, right? So if we do rotate higher, now, this becomes one big range. It's basically one big range. So as we go higher, that range below us is going to try to drive this thing back into that range here. Now, again, we have to be a little more careful up here because we're overall bullish. So in these scenarios, this is we look for a slight variation. If you're a student of mine, we call these bull traps a crown reversal. Same idea. It's buyers trying once. It's a lower low. It's buyers trying twice. I like to use this variation. We call these crown reversal patterns in our trade room. It's simple. It's a lower low in price. I mentioned earlier that for a bear trap, it's always a higher high because bears want to sell high, right? Sellers want to sell high. Well, buyers, they want to buy low. So they buy once, they buy twice. We call this entry counting. You'll learn this technique in a lot more detail in our intermediate classes as a student of mine, right? So one try, two try. Now, the difference in this one is I want to get just above that high here, right? Just above that high. That's what makes it a bit more of a cautious entry. I don't want to be selling. Here's the bottom line. I don't want to be selling as it goes lower. Okay. Why? because we're overall bullish. And there could easily be a channel right here, holds that channel and rips my face off, right? I want to be in the green on this trade. I want to be cashing my first paycheck. I want to be moving that target down to point of entry. I want to be taking profit, remove risk before there's any potential for the buyers to come in and eat my lunch, right? Make sense on this? Now, hopefully, I'm wrong about that. Hopefully, it'll just collapse back down and bear trap down here and back up again, right? But that is the slight variation we use in these scenarios where I love the idea of the sell up here, but because we're so bullish overall, and let's admit, the sentiment has definitely shifted after that 90-day pause, right? China's backed into a corner a bit right now. The world seems to be happy with that 10% tariff, right? So there's a lot of shift in the sentiment right now. So again, these are half size trade, right? Quarter size trade, right? A little bit less than full size because again, we're going against the overall momentum. Now, if we can hit this thing correctly, remember, don't just bask in your own glory, guys, right? Find that shallow pullback, that lower low, and this is where you pile on, right? Whatever, let's say, for example, I go a half size trade right here, right? I'll throw one more quarter on the add-on, right? Half size trade here, another quarter on, right? You know what I mean, right? You're building that position as it rolls back over. And again, we know where the market wants to go. In this case, it'll want to rotate. Now, in this case, think about that bigger range now. Think about the amount above that range, the amount below right there, right? That's coincidence. That line is just there for this illustration, right? But think about that type of pendulum swing on the other side of that combined range there, all right? And don't be surprised too. Don't be surprised if we run up and this thing just gets crushed back down again, because you know anybody who bought the dip on, what was that, Wednesday last week or Thursday? Anybody who bought the dip, they're taking their profit back at that high right now. So you have to assume right now, if we do make our way up around this high here, it just might get crushed right back down again. That's exactly why we use those V-top trades, right? I mentioned a V-bottom trade earlier on the video. If we go higher and we get whacked back down again, and we start grinding down. Now, I will admit, these are much easier on the psychology, right? On our emotions, because now momentum's already turned for the bears now. We're not so worried about picking that top. You know, I realize when you're new to this stuff, trying to pick that crown reversal can be a bit tough on the emotions, right? It's not easy. It isn't easy, right? If you do it in real time. So that can be tough sometimes, but once we start grinding down like that, we start separating off that, yeah, most folks, they start getting more confidence now. The key again is find that channel and don't miss that first test off the high. And of course, I can't teach everything in these YouTube videos. You will learn all the entry tactics off that high in that free video class I mentioned earlier here on the video. And also too, remember also too, if we run up and we see a crown reversal, get that short going in, and because it's so strong, they retest the high, I'll do it again, right? I will literally do it again. Another bite at the apple, a retest trade. Right? A retest trade. Remember, double tops, double bottoms are very common in a range breakout, because oftentimes the breakout is very strong. And then again, anybody who buys the pullback right here, they're taking their profit right here. So if we start seeing those buyers chase this, bam, right? Easy short, back into that range. And again, let that winner run. Now, what if I'm really wrong on this? What if something happens overnight? You know, a lot of tariff news right now. It's a very dynamic situation right now. Things are happening every single day right now. And who knows, the next good news out of the White House we might get. So what if we really ripped, right? What if this thing just ran and it broke out and just ripped running higher? We're already a bullish market overall on the hourly. What would you do in that situation? Well, in that situation, this range back here, I mentioned earlier, they become ready for or ripe for breakout pullbacks. So I'll begin looking for what I call two-legged pullbacks and try to use that area. We'll know more about this tomorrow, obviously. Once we know more, we'll know more tomorrow. But if this thing just rips and keeps going tomorrow on some good news, I would assume comes out sometime overnight or tomorrow morning, I then will begin looking for ways to buy the breakout pullback. And remember, when I do this sort of stuff, it's always one of those variations of the bear trap, right? So 1, 2, trap those bears in, back above the moving average, separation off that moving average. That's your clue to add more. And you're going in here now, right, and adding more as we go back up to retest the high. The only other variation of this would be a pop up into a range up here. Right? We pop up into a range up here. Easy, right? Well, maybe not that easy. What would that tell you? It's a bullish range. What do ranges love to do? They love to rotate, right? They love to rotate below and above. So, put those clues together, right? If I have a range down here and a range up here, let's use that previous range as a breakout pullback, right? Making sense? Use that previous range, breakout. Again, bear trap down here. Use that previous range, use that area now as support, right? Breakout pullback style, trap those bears in and squeeze those stops running higher. And you know where the market wants to go. It wants to rotate all the way back up. And again, if there's one time to leave a runner, it is during a range rotation. So a bit of a master class here today of range rotation, failed rotation, right? And how we can put that together and make some money here tomorrow. Now, speaking of tomorrow, we're back in our trade room, 8 o'clock Eastern time. Guys, the place to be every morning in the trade room, 8 o'clock. The best place to way to learn and trade along and start making money out there is do it with me every morning at the opening bell. Again, I'm going to put all the important links you'll need to get started in the description of the YouTube video. Start first with the free video classes. You're going to love that free video series. Start there first, then come join me in the trade room and we'll do it together. In the meantime, let's make some money this week. Follow the rules, patience, discipline, focus, confidence. As always, be well, be nice to each other out there tomorrow, and be here next time. Adios, amigos. Bye for now.